In Europe, there are many beautiful rural areas like this one. Support from the Regional Rural Development Programme under the European Agricultural Fund for Rural Development is helping farmers, tourism, businesses and local service providers here to invest in the countryside and keep it an attractive place to live, work and visit. Farmers like the Merinos have lived here for generations and their family farm produces traditional olive oil products. They want to expand their business further by investing in new processing equipment that will increase the quality of their products. Not far away from them lives Guido, a young farmer who took over his parents' pig farm. He has ambitious plans to modernise productivity using new technology. On the other side of the village, Carmela and her family run a small bed and breakfast as part of their farm. Carmela believes that possibilities exist to expand and develop self-catering chalets on their land. Despite their good ideas, each of these rural entrepreneurs has recently had difficulties obtaining the finance they need for achieving their investment plans. After several disappointments from different banks, the entrepreneurs asked the managing authority of the Regional Rural Development Programme if they can help. The managing authority was only using the Rural Development Programme for grants, but one of the staff remembered the European Commission talking about FI-Compass and financial instruments in the last monitoring committee meeting, so the staff started looking for more information on it. There was a lot of useful information on the website of FI-Compass and also on DG Agri's webpage about financial instruments. A member of the managing authority staff also remembered hearing from DG Agri about targeted coaching under FI-Compass, which looked like it could be helpful for them. Helena, from the managing authority, asked her counterpart in DG Agri about receiving targeted coaching. This was quickly agreed, and soon the managing authority had their first face-to-face meeting with the FI-Compass team. Coaching sessions help the managing authority to better understand its role during the different life cycle stages of a financial instrument. This coaching also explained the financial sector's role in rural development financial instruments being delivered by commercial banks. Together with the information on the website of FI-Compass, it gave the managing authority the basic know-how that they needed to start preparing for creating a financial instrument. In addition to the coaching, Helen attended one of the FI-Compass EAFRD conferences, where she heard about examples of financial instruments that are already running. She discovered a very useful step-by-step guide explaining the process of carrying out an Exante Assessment for agricultural financial instruments. Helena was also pleased to learn that the Rural Development Programme could be amended as many times as needed and whenever needed for financial instruments. The managing authority used a consultancy company to carry out their Exante Assessment, which confirmed that farmers and rural entrepreneurs in their region faced difficult access to finance. The study also confirmed that loans and guarantees could be repayable if suitable conditions were provided. This was the news that the managing authority had hoped for, because it meant that they could also involve private sector partners like banks. The banks would be more willing to get involved if they knew demand existed and that the EU funds could help them reduce some of their risk. After analysing the Exante Assessment at the Monitoring Committee, the Managing Authority decided to move to the next step. After a lot of discussion, the Managing Authority decided that the most useful financial instruments for the region's farmers and entrepreneurs were new loan schemes. These could include reduced interest rates, longer maturity or grace periods, and be implemented by a number of different banks. It took about a year for the Managing Authority's preparations to be completed for the new loan schemes. The Rural Development Programme was also amended and the new financial instruments were then launched using a carefully thought-through communication campaign. Guido, Carmela and the Merinos were some of the first people to benefit from the more affordable loans that the banks could now offer using the Rural Development Programme money. The Merinos got a loan with reduced guarantee requirements and lowered interest rate, helping them modernise their farm. Carmela managed to obtain a loan based on a solid business proposal. The interest rate was low enough to repay it, and she's now welcoming new visitors to her new tourism chalets. Guido also received a good deal, which allowed him to upgrade the pig farm in a way that saves him money on his energy and water bills. Isn't it time now for your Rural Development Programme's Managing Authority to set up its own unique financial instrument to support rural entrepreneurs like the Marinos, Guido and Carmela? For more information about financial instruments under the European Agricultural Fund for Rural Development, please visit ficompass.eu.